are live. It is January 18th, 2022. Thank you, everybody, for joining the channel. This is Cowboy Metals live stream, where we broadcast from the great state of Texas, and we take no BS. I am your host, Robert Keats of GoldSilverPros.com channel. Welcome, everybody, into the program. We're going to give it a few minutes to load while we discuss what's going on in the silver market. The Bullion Banks have gone long silver for the first time that I have seen in a long time. And I think that means something big for the price. And we'll talk about that. We'll talk about why silver went up just a little bit today and had its first positive day here in a little while, and what we think that means for 2022 in the precious metals. Welcome, everybody, into the program. I see a lot of people are here. We're already loading with 60 right off the bat. It's pretty good, guys. Ralph Potts is here as always. Pat BFD is here. 𝙎𝙄𝙾𝙆𝙎, ASDFFDSA. Let's see if I can say this name. 𝙂𝙍𝙊𝙎. I'm sorry, I'm doing a bad job. I'm just going to call you New Zealand is in the house. Peter Frowine is here. Thank you for emailing me, Peter. We'll get back to you about that meeting later this week. Lawrence Sawicki is here. 𝙎𝙄𝙾𝙆𝙎. I think I've already welcomed you into the program. Neil Hahn is here. Great Nate is here. Thank you, everybody, for joining. We'll give it another couple minutes before we get started on the topic, which is, yes, the Bullion Banks went long silver on the COMEX derivatives. We're going to talk about that. Should be a lot of fun there. And we're going to talk about that. We're going to talk about some economic data, which is going on right now, which says the precious metals are setting up for a good bull run. We'll get into all of that. You guys remember we have super chats are available. So what you can do is you can throw a super chat in there in the chat, and I will grab it and give you an answer to your question. Also, we'll be answering as many of the regular chats as I can, as I have the power to during the program. Thanks, everybody, for joining in. Gonzo's here. Kevin Hill is here. Robin Kelly is in the house. Nate Navy is here. Robin Hood. Fazdal Tree Climber. John Bethea. John Wilkinson. G-Dog Bull. Jesse Cabasa is here. We going strong with 127 viewers. I better get started. There's a lot of people showing up today. You talk about going long silver and people come out of the woodwork and they're like, yeah, it's time to have another Cowboy Metal live stream, baby cakes. All right, looking like we're healthy. Good connection, and away we go. I'm going to show you a nice little report from our friends, the CFTC, Commodities Futures Trading Commission, and something called their little COT report. We're going to talk about that. Let me share the screen with you guys. We're going to first go over the gold price. As you can see, 1814 down about $5 on the day. Gold didn't do much. It's been rallying of late, but today was pretty much a sideways day for gold. But silver is up 23.47, up 45 cents, or about 1.96%. That's a pretty good move for silver. You can see this nice little jump early in the day. Why did that happen, ladies and gentlemen? We're going to look back at some data from the Commodities Futures Trading Commission. Yes, we're bringing back the Commitment of Traders report. This is as of January 11th, 2022. This is the latest one from the CFTC. You can see right here, cftc.gov. And we've seen something on this report that we haven't seen in an awful damn long time. I mean, a long time. This is the Silver Commodities, Commodities Exchange Incorporated. This is silver. This is a disaggregated commitments of traders. And why do we care about that? Because it gives us reportable positions. And these are all the reportable positions that we have. You can see that the highest short position at 43,334 contracts, 30% of all open short interest is in the producer merchants, which makes sense because a lot of the producers will take a short position to hedge their downside price risk. The swap dealers, ladies and gentlemen, are net long. Look at this. 39,120 contracts of 5,000 ounce silver long, and only 38,895 short. Yes, ladies and gentlemen, the Bullion Banks, aka the swap dealers, have gone long silver. When in the hell have we seen this in the last few years? I can't remember a time. Now, this could be ephemeral. It could be here and then gone tomorrow. Maybe they're just resetting the board, resetting their positions. But sure as hell looks to me like they're positioning long. Why are they positioning long? Because they expect the price of silver to go up over the long term. We'll have to see if that actually happens, because how many times have we said this and it hasn't happened? But this is the first time we said silver is going to go long, and the bullion banks were already in a net long position. That's what's changed. They're 27% of the long position, 27% of the short position. When's the last time you saw that? Where is the managed money? Well, they're sitting 50,000 long and only 32,000 short. And then the other reportables, the rich people in the family offices, is 15,000 long and 6,000 short. The only people that are short are really the producers who are hedging downside price risk. They're short, and that makes sense. For the first time, ladies and gentlemen, and I don't know how long, the commitment of traders report in silver actually makes some damn sense to me. That's the way it's supposed to be. Yeah, everybody's net long except for the producers that need to be net short to hedge their downside price risk. This is what a COT report is supposed to look like in silver. We haven't seen it in freaking years. What does that mean? I think it probably means that everybody expects the price of silver to go up, including the bullion banks. They're betting on it. Now look at what they did to get that position. They added 5,690 long contracts and got rid of 726 short to get there. So the week before, from January 4th, 2022, they were pretty close to being net long, but they were still net short, probably by about 4,000 contracts. But this is the first report I've seen where they're net long. Looky there. That's a big deal. Let's see what happened on the open interest. So not a lot of slam downs in the price. The last slam down was January 6th. I covered that in my last video on silver. And actually, I believe I covered that on the monthly for our Patreon subscribers. But in any case, it looks like the price kind of drifting a little bit. Look at the settlements, and it went up yesterday, or I'm sorry, on Friday's data, it was down to 22.84, and today it came up. That's why the price rose, because you had the March contract trading 103,744 contracts at 23.49. That's why the price came up. We go over here, 23.46. That's the tail of the tape right now. We'll look at where they settled on Tuesday. This is today's data, 23.49. So that's why you have the price. Why are they going long? I don't know. It's not in the data. They're just expecting silver price to go up. Everybody is expecting silver price to go up. Look at these long positions, 39,000 long in the swap dealers. The managed money, 50,000 long. The other reportables, 15,000 long. They're all net long. Okay, huge. So I'm thinking the price goes up. Now, I did have David Hunter on a recording this morning. That's going to come out Thursday for you guys. I know you love David Hunter, the macroeconomic contrarian. He thinks silver could go up to $50 and gold up to 2,500 this year. That would seem to align with what's on the COT report. I don't know. I want to get your opinion. What do you guys think? Do you think we're going to hit $50 silver and 2,500 gold? I don't want to spoil David's interview, but he has put this out over Twitter. So I'm not really giving anything away he hasn't talked about on his own Twitter channel. But yeah, he thinks the metals are about to go really long. It looks like on the commitment of traders reports, the derivative players are all playing their roles and going long like a normal market in silver would look like, except for the producers hedging their downside risk. Okay, that makes sense. What are you guys thinking? Let's go over here to the chat. Sarge, how you doing, brother? I see you in the chat. I always see you in the chat. Welcome to the program. What do you guys think? Put your comments below. We should run a poll. Let's do a poll real quick. Do we actually think, here's the name of the poll. Do we actually think they will let silver go long? Question mark. Yes, no, and then maybe, so, not sure. Here is your poll. It's coming up. Everybody answer the poll. Do we actually think they're gonna let silver go long? Yes, no, maybe so, not sure. Put in your answers to that poll, and at the end I will close the poll and we will get the results in the chat. Daniela Michelle is here. Oh my goodness, she is in the chat. Yeah, I'm not wearing the hat today. Have the hat over there. Decided to take a one-day break on Cowboy Metals live stream from the hat, but I'll bring it back next time, I promise. If you guys are extra special nice to me, I will. Now, I am recovering. As you may be able to tell, I have a little bit of sinus stuff going on, and I look white as a sheet. I did have head cold type symptoms, flu-like symptoms. I'm waiting on the test back to see if I had Omicron, the newest COVID variant. I'm not sure. It didn't kill me. I mean, I was tired. I had some basic symptoms. I was still able to work. I just kind of worked half time through it and rested a lot this weekend. I think I'm doing better. Again, I'm not confirmed to have had COVID-19. Still waiting on this test I took Friday. I know why they're taking forever on this, but we'll find out soon. But I may have just recovered from Omicron, so I'm still a little stuffy, still a little fatigued. I'll do my best in the live stream tonight, guys. We got 231 people in the live stream. Just to recap, Bullion Banks go long silver, manage money long silver, rich people long silver. The only people short are the people that should be short, the producers who have to hedge their downside risk. That, damn it, ladies and gentlemen, this is a normal silver market. And all the years I've been following it, this is the first normal silver derivative market I think I've ever seen. What the hell is going on? We're in the twilight zone, but that's good for the silver stackers because it means everything is set up for silver to go long. If you've been waiting for 10, 12 years like I have, everything is set up to go long. Now we have to see it stay that way for a while. They could flip their positions next week. We could get the new COT report out and they go back to shorting the hell out of it. You know, hoping that's not going to happen. I hope they're going to let it roll long here for a while. But if they stay this way net long for a couple of weeks, man, Katie, bar the door, you could see a massive move in silver. I do think we'll get the move in gold first, though. So I'm not going to call this massive uptick in silver just yet. I'm going to say factors are aligning. It looks like we could be going that direction. We'll have to see what happens. I got more stuff to talk to you about, guys. I did a breaking earlier today. One China is closing down 3 cities. 2 of those are big manufacturing centers for tech. And according to Bloomberg, this could be the beginning of all-time supply chain shortages. And especially in technology, Bloomberg reports that you may not be able to get your iPhones, you may not be able to get your technology parts, you may not be able to get your computers because they're shutting China down. One city they're shutting down, an entire city, because 2 people confirmed COVID. 2, ladies and gentlemen, 2. That was in the Bloomberg report. 2 people, and they shut an entire freaking city down. Those Chinese do not mess around at all. I think the other city, they had 21 out of like 14 million, and then they shut that down. So I don't know, we'll see if the shutdowns work, but it looks like the supply chain will be interrupted. We don't know how much. Bloomberg thinks this could potentially spread to a larger swath of Chinese cities and therefore greatly affect their exports and their manufacturing, which of course is going to affect the United States and everywhere else that depends upon China. For technology and for other goods and services, we'll have to see what's going to happen, but it ain't looking too good in China at the moment. We need to go back, ladies and gentlemen, to talk about the economic news. Yes, we do. So let's get this darn COT report off of the screen. Here is your U.S. economic calendar. I wanted to point something out, and it's this one right here. The Empire State Manufacturing Index. The Empire State is Gotham. It is New York. And out of that comes a key manufacturing index, a piece of economic data that we look at every single month on GoldSilverPros. And now I look at every month to see how the U.S. economy is doing. The productive part of the U.S. economy, and I mean the part that actually produces stuff that we use every day. That part of the economy is down. We had a negative 0.7 print. That's today, the actual negative 0.7. Why is that bad? It means we're not producing stuff, more stuff, we're producing less stuff. That's what the negative number means. Now, last month it was 31.9. Economists expected 25.5. They expected it to fade a little, probably because the consumer's not buying as much and retail sales are basically flatline Q3 and Q4 of last year, as I've been calling for months and been putting on these breaking news segments on the program. Well, now it's not that we actually came down, but we're still positive and still producing more. We're actually producing less, almost 1% less. That's what that means. So that is a very big piece of economic data, ladies and gentlemen, because it ties into the inflation story. It ties into consumers over indebted and maxing out their credit cards. It ties into the fact that we had flatline consumer sales, both e-commerce and brick and mortar in Q4. It ties in with a lot of things. We're not producing as much right now. And what did I just mention a minute ago? it was the supply chain problems we're about to have coming out of China, according to Bloomberg. So, ladies and gentlemen, things may get a wee bit more scarce going forward here, including silver, because they went long. Silver, the Bullion Banks did. I got to throw this up on screen again. This is the main thing that you need to take away from this here presentation on the channel, ladies and gentlemen. The swap dealers, the Bullion Banks, are net long. They're 39,000 contracts long and 38,895 short. They're long. I haven't seen this in forever. We may have supply shortages of silver because everybody's buying it and expecting the price to go up. Not only that, we may have supply chain shortages from goods that we manufacture, and China apparently wants basically to stop exporting, and they're shutting down all their cities. More supply chain problems coming to an American city near you here in the next couple of months. I've got more economic data we're going to go over, but I'm going to go back to the chat and see how you guys are doing. I don't see any super chats, ladies and gentlemen. You must not have any questions you really want to ask me. Let's check the regular chat and see who is here. Donald Best is here. Casey Carter is in the house. Sarge, we've already said hi to you, sir. William Iannucci is here. Matthew 𝙂𝙊𝙇𝙀𝙖, I hope I got your name correct. And Linda Smith is in the house. Welcome, everybody, to the program. We appreciate you being here in Cowboy Metals live stream. We seem to be doing this every Tuesday. We broadcast from the great state of Texas, as you can see from the flag right there, and we take no bullshit. It's because I'm a former auditor, and I don't take bullshit from anybody. Welcome, everybody, to the program. What do you think is going to happen with silver? We have a prediction coming up on the channel on Thursday. David Hunter says gold could go to 2,500 in the first half and silver could go to 50. He's put that out over Twitter. You have to stay tuned to Thursday night's broadcast to see what else he had to say. The contrarian macroeconomist, is he right? Do we actually think they will let silver go long? This is the poll question. 39% is saying yes so far. 32% is saying no. 30% saying maybe, I'm not sure. It's almost a third each. It's pretty damn close. Now, a little bit more are saying yes. Not everybody, but that's a pretty darn close poll. We're going to leave that open for a little while longer. Let's see if we have any questions. Robin Hood says, I'm going off the premise that the dollar dies this year. A man can drink. Yes. We can all dream the dollar will die this year. Actually, it would cause great economic dislocation to a lot of people. So we hope that everybody's got their silver and gold, and then the dollar dies. That would be the better, much better situation to occur. Great Nate, appreciate all your work, Rob. It has to happen soon, that's for sure. I agree with you, Great Nate. We've been waiting forever, man. I've been waiting 12 years on this train, baby. We have run out of coal about 100 times. The train has stopped. We've been pushing it along. You know, whatever other metaphors I can think of. Yeah, we've been waiting a long time. I just hope everybody's prepared, because when the dollar goes down and the metals run, there is going to be a lot of pain. We hope that everybody's been listening to GoldSilverPros in my writings and on my videos for the last 12 years. Hopefully you guys read the book and you're prepared. So when that happens, you're in a good spot, because, ladies and gentlemen, a lot of people aren't going to be, and it's going to be an absolute mess. Way over 50, Linda Smith says. Linda, I think you could potentially be right. I think when it runs, it's going to run hard, and it would not surprise me a couple $100 silver. Now, when we were in Idaho, I sat down with David Smith and David Morgan of the Morgan Report, and they were making the case of where we could potentially have $600 silver if you took everything into consideration: money, printing, debt, all that kind of stuff. Will we hit that? I don't know. David said that doesn't mean it would happen that way, but it could if you're looking at the numbers. Now, I've got another number for you guys. This one's going to blow your mind. There's so much economic data that comes out, and they're all little pieces to the puzzle. It's a little piece here, little piece here, little piece here, piece here, and we put all this together to see the big, you know, the jumbo puzzle. And you guys that used to solve puzzles, or if you solve your jigsaw puzzles, you realize you have 500 pieces you got to put in there. You got to look over all the 500 pieces to get the big picture, right? Well, let's look at Norway. What the hell is going on with Norway? This is their producer price index. Norway's producer price index year over year. So we had something like a 9.2% print for our last PPI here in the US. Look what freaking Norway's got. 68.7. Their prices are almost 70% higher than this time last year, than January last year. 70 freaking percent. A lot of it has to do with energy prices. We've been reporting that energy is absolutely going bonkers in Europe because, one, they're wanting to shut down nuclear plants. Two, they're wanting to get rid of greenhouse fuels or fossil fuels, they say produce greenhouse gases. I don't know about that, but that's what they say. And there's a big Nord Stream 2 pipeline issue between Russia and Europe, and it's causing energy prices to go bonkers. And look at this rising. It was 9.7%. This is back in October. No, this is back in March. I'm sorry. And then it's risen all the way to 68.7. Look at the max. Look at since 2002. Bam, look at that print, 68.7%. And it's been going up since February 10th, 2021. It's been going up for 11 months in Norway to bonkers sized producer price inflation, which, ladies and gentlemen, that's one step from the consumer where you're going to get this consumer price index. Okay, because what happens when producers are paying 70% more than they did a year ago? They're going to pass it along to the great people of Norway that have to buy stuff to live. And that's what's happening. This is your canary in the coal mine for Europe and then for the rest of the world when this high inflation comes. This is what it looks like. It's not just Zimbabwe. This is Norway, guys. This is This is a major economy in a major trading bloc going absolutely freaking bonkers. Here's the Bloomberg story. Norway's inflation jumps more than expected to a 13-year high. This is back in December. This is back when it was this high, you know, the 50 and 58. It's now almost 70. Headline inflation rose to 5.1%. That's their consumer inflation, the highest level since October 28, 2008. That's in the height of the financial crisis, ladies and gentlemen. That's 13 freaking years almost. Well, it's actually over 13 years. Highest inflation in Norway. That's what the consumers are paying. They're going to pay a lot more because the producer prices are going absolutely bonkers. Look at this price chart. Look at inflation and core inflation in Norway. Absolutely going bonkers. Okay, this is what happens when you have an energy crisis and the idiots shut down nuclear and natural gas. Could that be going on or about to happen in the rest of Europe? It is quite possible. That is stunning. That is stunning. Another nail in the coffin of the economy, of the European economy, because they have high inflation and high energy prices. That's not good. That's really, really, really not freaking good. We feel for the people in Norway. God, I hope you got your silver. Because why? Because the bullion banks have gone net long in silver for the first time I can remember. And if this position holds, silver should start to shoot up. So Norwegians, go buy your silver while you still can to offset those high energy and food prices that you're experiencing. Silver and gold are the way to do it. And you may be running out of time. In fact, it may be too late for Norway already. We hope not, but we're going to monitor that situation. Guys, we're seeing inflation rage around the world, and we're talking about mainstream economies and mainstream trading blocks like the European Union. Okay, this is no longer just like Zimbabwe or these, you know, outlying, or Turkey or even Argentina. No, we're talking getting closer to home. Inflation is raging. Okay, this is a big damn deal. I don't know if I can overemphasize this. I don't think I can. And we're about to have supply chain shortages. Remember, China's locking down, and Bloomberg is having a fit over it on Monday because China's locked down 3 cities, and Bloomberg says it sees the mother of all supply chain issues coming. At the same time, I just told you our manufacturing number is down 0.7%. We're making less here, and manufacturing is not even the biggest part of our economy anyway, but what we do have is not as productive. More news coming at you than you can shake a stick at, and man, it is just coming fast and furious, baby. It is fast and furious. Put your questions in the super chat and I'll answer them. Good thing you guys have been following me for the last few years, because I know the 360 people that are sitting in this chat right now are paying attention. And you guys have bought your gold and silver. Maybe you got some Bitcoin. Maybe you bought some food and water, you know, beans, bullion, all that kind of stuff. Bullets. What is that prepper phrase? Hopefully you guys have done everything that you needed. You got your medications that you need, your critical medications, you know, got a little extra gas for the car, you know, use a little, you got heating oil, you bought a little extra of that, some extra propane, whatever it is that you need. I hope you made your preparations, got your precious metals. Because man, when I look at these economic numbers around the world, they're looking nasty. And I think that's the answer to the question of why the bullion banks are going long silver, because people are about to pile big ass time into the precious metals and they don't want to be caught too short. Okay, that's what's happening. We're going to go back to the COT report one more time for those of you that just joined. I'm going to show you something that is absolutely 100% ridiculously astounding. We're going back to the commitments to trader report. This is as of January 11th, the latest one that we have. We'll get another one here in a day or so. These swap dealers are net long, 39,120 contracts long silver and only 38,895 short. And everybody is net long, including managed money, including other reportables, including even the non-reportable positions, except for the producer merchants, which are the ones that have to hedge short because they have downside price risk. That's ladies and gentlemen, this is the first normal, what you would normally expect in a commodities futures trading position report that I think I've ever done for the channel. I cannot emphasize how out of the fucking ordinary this is. This would be a normal report that's not highly manipulated. Okay. First time I have ever covered that type of report in silver on the channel. I cannot overstate how fucking important this is. Are we going to have the run? I don't know, because they always have tricks up their sleeve, but the stars are aligning. The economic data has been sick lately. They're going net long silver. Now, they're not net long gold. They're still massively short on gold, the bullion banks are. So I don't think we're going to have the huge gold pop, but I think they're going to let silver run a little bit here. And obviously the price is too low and there's pin up demand for higher silver prices. And I think maybe that's why they're doing it, to let off a little steam. But I won't call silver going to 50 until I see gold move. So I think gold's got to move first before silver hits 50. Now, silver could hit 30 based upon the net long position the bullion banks have, and everybody being net long except for producers, and that being somewhat of a normal commitment to traders report. I could see the price tipping 29. I don't think they want it to go past 30. I don't think they really want it to go past 27.50, but they really don't want it to go to 30, because that would spark a run in both gold and silver, I think, and psychologically in people's minds. So I think what they're going to do for now is keep it somewhere 25 to 27.50, but they're going to let it go up. And then when gold moves with it, then you're going to see the parabolic move that David Hunter thinks is coming this year. And I happen to agree with him. I do think it's going to go up. I don't think it'll go to 5,000 gold and $600 silver, but I think you could see $2,200, $2,300, $2,400 gold, and you could see in the low to mid 30s silver before they try to tamp it back down again. I think that could happen. And I think people are starting to pay attention to the metals right now because we have such negative economic data. Let's go back over. Bloomberg said on Monday, we may be about to see the mother of all supply chain problems, because China closed 3 cities. And it looks like they may do more. And they closed 1 city because 2 people got COVID, and 1 city because 21 people got COVID. The Chinese are not effing around there. Our manufacturing is down. That's Empire State Index. We also talked about that. I'm doing the recap here for you guys that may not have seen the entire program. And Norway's inflation is almost 70% year over year. And it's been raging for 7 to 8 months. Norway people are going through pain. A lot of it has to do with the energy crisis in Europe. But I think it's also indicative of higher prices due to money printing the last 12 years since the financial crisis. And the shit is hitting the fan in Europe now. When I originally was writing on which economy would probably go down first, this was 7 or 8 years ago on Seeking Alpha, I said, I think Europe's going to be the first to go. I still think Europe's going to be the first to go. And I think you're seeing the numbers really nasty in Europe. And that's probably what's coming to the rest of the Western economies too. Buckle down, ladies and gentlemen, the shit is coming. Okay. Buckle it down. Do what you got to do. Get your financial positions, get your Bitcoin, get your gold, silver, whatever you're investing in. I'm a gold, silver guy. That's where I'm going. I know some of you guys go to Bitcoin or Monero, whatever the case may be. Get your supplies, do whatever you got to do. I think it's going to get real. This year, it's going to get real. I don't think it's the end of the reset, but I think it starts to get really, really real, if that makes any sense. Do what you got to do to protect yourselves. All right. So let's see if we have any questions. But before I do that, let's go back to the poll. Man, 193 votes. You guys are on the poll today. Do we actually think they will let silver go long? 42% are winning with the yes vote. 30%, roughly a third with no, and the rest maybe so, not sure. You may be so, guys, go up there and change your vote. I don't think you can, but change it to yes or no. Come on, let's get a positive vote either way. All right, Ministry of Metals, here's a comment. I think big money knows the system is dead and they're going to digital Fed coin or CBDC, which is going to be practically no change for them. I agree with you, Ministry of Metals. That was an awesome comment. 100% on top of you there. Agree with you 100%. Questions, guys, questions. Matthew 𝙂𝙊𝙇𝙬𝙂 says, Rob, instincts are good. Perhaps the powers that shouldn't be are no longer fixated on gold and silver control and distracted with trying to control cryptos. That may be. They're rolling out their entire SEC. They're rolling out the CFTC and everybody trying to regulate it like it's a banking system. Good luck with that. I don't think the Bitcoin and Monero people and Litecoin and all those people are going to like it. Wayne Faulkner asks, is silver going up or are they all running for safety? I think it's both, because I think when they run for safety and they take that downside derivative pressure off the market, people are going to notice it's going to go like this. Boom. Just like that. Why? Because think about it this way. You have a pot on the stove and it's boiling and the steam's coming out the lid and you got a lid on it and the lid's going bumping off and, you know, it's wanting to push the lid off. And then along comes the human to say, okay, we need to let the steam out. And they grab the lid on that pot and they go, what happens to all that steam? It just goes like that. I think that's what potentially could happen to the silver market. They took the lid off that damn thing and it could really go crazy. You could see that water boil over and that steam come out. We'll have to see what happens. Why did I use that analogy? Because I just cooked yesterday for my son some macaroni and cheese. And that's exactly what happened when I took the lid off the pot. So anyway, good question there. Anybody else have questions? You can either throw them in the super chats or throw them in the regular chat. And I'm reading through. I pray the war does not go nuclear. I agree with you, Peter. I hope we don't do the nuclear option either, whether that be in the financial markets or anywhere else. What happens when 10-year note? Brandon Baker, finish your thought. It says, what happens when the 10-year note and then GI and then it stopped? Watch the program Thursday. I talked to David Hunter, macro contrarian economist, about bonds. We spent a few minutes on bonds. Watch Thursday's program, ladies and gentlemen. You're going to want to listen to what he has to say with bonds. It's so very, very important. He gives a really good preview of what he thinks is going to happen. And guys, I want to talk about a couple of things with you guys. We're going to share screen again. We're going to talk about our website here for a moment because, well, just because we can. So I'm going to share screen on our website. Remember, you can come to GoldSilverPros.com. You can click on join our free newsletter like I just did, put your name and email in there. And on Mondays, we're setting out a newsletter digest. We're not spamming you every day, but on Mondays, we'll give you some video content. We'll tell you what's going on in the world. We'll bring a lot of other useful information. It's free to your inbox only one time a week. And the only time we'll send a second email during the week is when we have special events coming up that you don't want to miss. And guess what? We have one. It is the 2022 Metals Kickoff Conference. This is January 26th. It's virtual on the Hopin platform. The fourth one we're running on the Hopin platform. We think you guys will enjoy it. Click on this button to register absolutely for free. Doesn't cost you a dime. We're going to have some great speakers there. We're going to have James Anderson with the keynote and when and how to sell your gold and silver, which we need to know. You need to know your exit strategy. Tavi Costa is going to come and talk about the gold market and the miners. John Fennick is going to come and talk about a lot of things. This is an extremely intelligent individual who's been on my program before, and I brought him back for the conference because he's going to cover an absolute crap ton of economic information in the report. He's going to talk about mining stocks, gold and silver, the economy. You don't want to miss John Fennick. Dave Kranzler, Investment Research Dynamics, will be there in a roundtable with myself, Andy Scheckman, and Ian Everard from Mark Silver, and Andy from Miles Franklin. And then for about 45 minutes at the end of this conference, ladies and gentlemen, I will be there with you answering questions in a session where you can meet me face to face. And we'll have a bunch of companies. They're going to be talking about their opportunities as well. If you're interested, that includes Silver Viper, Tier 1, Silver Hammer, Reina Silver, Contango Ore, and 𝙭𝍺𝍺, companies that we like. Remember, lastly, if you want, you can get precious metals deals on our website through Miles Franklin and Ark Silver. All you do is come down here, you click on Get Access and fill out the form, and you guys can make your orders, and they will get back to you within 24 to 48 hours and give you the best deals because I negotiated the best deals for you. Ark Silver has great deals on silver, and I mean great deals. 99 cents over spot, 1,000 ounce bars, $1.39 over spot, Kennedy 40%. I don't know where you're going to find silver any cheaper than that. And if you want to expand upon that and go get a lot of other silver and a lot of other gold, Andy and Miles Franklin will do that for you. And I negotiated good deals with Andy because he's a great guy. He helps out our listeners and he loves GoldSilverPros followers, ladies and gentlemen. All right, getting back to the chat. Hoping my mining stocks change trajectory, Casey Carter. I think they will because they're probably the lowest relative to the precious metals prices that I've ever seen them in 12 years of looking. And when I talked to Dave Kranzler, he's like, since he's been in this for decades, it's the cheapest the mining stocks have been. So now's when you want to buy. When a guy like Dave Kranzler and all of his experience on Wall Street and doing the mining stock journal, the short sellers journal says, hey guys, this is the cheapest I've ever seen the mining stocks relative to the metals. That's when you want to buy. Okay. That's, I'm not your financial advisor. Conduct your own research, talk to your CPA, whatever. But at the end of the day, that's pretty darn good advice as far as I'm concerned from Dave. So I'm taking it. Sarge says, Rob, thanks for your hard work. It makes a difference. Keep the good work coming. You're welcome, Sarge. I'm doing my best. I'm doing my best over here to bring you guys the best news. The bullion banks are long silver. Is it time to rejoice? I don't know. 44% of people in the poll say yes. I'm liking the positivity. God knows we've been waiting forever for this to happen in silver. Crossing fingers, they leave it there and let silver run. Let silver run. Let it free. Let it free, finally, ladies and gentlemen. Oh, Peter Frohwein says, buy American Pacific Mining today. I agree. They're one of my favorite stocks in that space. And I think I may just go buy more of American Pacific Mining. It's a good company. And a great interview on the channel Monday. Warwick, if you want to go listen to him, I think he's got really good information for you on American Pacific Mining. Anything else? Is 1,000 ounces sufficient, says Jesse? Well, that depends on how much you think you need, how much you're protecting. I used to have a calculator on the website that will help you calculate this, but prices move so much, we took it down. But essentially, you don't need as much as you think you do. And really what silver is used for is short-term, more of a short-term investment than gold. So 1,000 ounces may be enough. You may want some gold for long-term price protection, protecting the mortgage on your house, protecting some of your other assets. Silver is more short-term. It's what you're going to spend to barter for things. It's what you're going to liquidate. You need a little extra cash in the month. So I may get a little bit more silver than gold, but I would have a little bit of both. Hopefully that answers your questions. And Dumb Money Media is back in the super chats. What's up, Rob? I've been a busy bee. I was wondering if you'd ever want to interview Reggie Middleton. I kind of have the hookup now. Yeah, you'll have to get me the hookup with Reggie. I hit him up on Twitter about 6 or 7 months ago, and we had scheduled something, and then I couldn't make it and had to reschedule, and I wasn't able to ever get him back. I think he's just super busy, but I want him on the program. So if you got the hookup, Dumb Money Media, get the hookup there and see if we can get Reggie on the program. I want to talk to him about Veritasium and other projects he's got going on. Would love to have him. Super smart guy, by the way. Reggie is a brilliant, brilliant guy. The time is now, says Once in Exile, and I 100% agree with you. Peter says, I think I need what I have. 95% of my assets are gold and silver. I agree with you 100%. Dissident Agnostic comes in. How much do you think an ounce of gold will cost in 20 years? If they actually do the reset with Basel III the way I think it's going to be, I think they're going to hit gold at 10,000 right off the bat. Now, that will be in the next 3 to 4 years, in my opinion. That'll be by the middle of this decade. 20 years from now in 2042, gosh, who knows? I think it'll probably be 15 to 20. It depends on how the era of central bank digital currency goes. And I don't know because it's the first time that we're getting into it. No one really knows how CBDCs are going to turn out. That is the next system. Is it going to last 40 to 50 years like the existing system did since 1971? I hesitate to think that it will. I think there's going to be a lot of rejection. I think it's the first time that they're doing it. It's an experiment, but who knows? I think it's going to go worse than the paper currency era. So I think gold could go up a lot. So you could be sitting at $15,000, $20,000 gold. In today's dollars, of course, we won't be using today's dollars. So you're going to have to remember what a dollar would buy now, and then what a central bank digital currency will buy later. And then you're going to have to translate that on a percentage basis to figure out in today's dollars. I don't really know. I think in 20 years, we're not going to be using today's dollars. So we're going to have to remember what we used to pay for stuff. And then we're going to make the comparison that way. It's probably the way it's going to happen. Good question, Dissident Agnostic. Thank you so much for the super chat. I appreciate it. Guys, the bullion banks went net long silver. Rejoice. rejoice. They went net long silver. And in a time in which we have supply chain shortages and major economic issues hitting Europe, major energy crisis hitting Europe, this could be big. Everything could be aligning for silver to run. 43% of you say in the poll you think it's gonna run. Only 30% say no, and the rest say maybe so, not sure. We're going to end the poll and put those numbers down in the chat for you. I'll be here with you for another few minutes answering questions, and then we're going to roll out and let you guys get on with your Tuesday night. Remember, tomorrow we have a special guest on the program talking economics who thinks gold and silver is going to run this year. That is one Leor Gantz. And then Thursday, we have David Hunter on the program who also thinks gold and silver is going to run. I've got two analysts this week, ladies and gentlemen, who think gold and silver are going to run this year and run hard. And it looks like it agrees with the 𝙁 report from the CFTC, which is showing that the bullion banks are net long. And we have a regular, what would to be expected, a regular derivatives position on the 𝙁 report. Wow, how long have we been waiting for that? How in the hell long? It's been forever. I'm so excited. I forgot to put on my hat. No, I'm just kidding. I'll put on my hat next time. Rob, thought on short-term timing. Just buy your silver. That's my thought. Just buy it because, you know, silver could run to 25, 26 here real quick and then vacillate and then pop back up to 27, 28. I don't know. That's actually going to go. We're going to look at the derivative trade. I mean, that February, March timeframe is looking very bullish. So we got another month really before the final trading on that dominant contract for silver. So it's going to be some time before we know on the derivatives market. But I do think their upside price or the pressure for higher prices and the upside momentum is very strong in silver right now, technically speaking. Fundamentally, of course, because we're having silver supply shortages, but the technicals are starting to align with the fundamentals. And I think we could have a little bit of a breakout. That's my opinion. I don't know exactly when it's going to happen. You have to pay attention to the derivatives market to know, because that's what determines the spot price. It's not the physical trade. It's the derivative trade. It's the paper trade. It's just the way it's done. You know, we don't love it, but that's just the way that they set the thing up. And that's why we pay attention to it. That's why I went over the 𝙁 report, I think 3 times on the video, so we would know. All right, 𝙂𝙁𝙇𝙬 says, Rob, do you think that the 𝙁 report may have been influenced by the promise of QT? Do you think 3 trillion of assets being sold may have an effect on the non-metals asset? Yes, I do think that people are going net long because of the Fed reportedly pulling away the punch bowl. And when they do that, it's going to hit the stock market. Remember, fourth quarter 2018, 20% stock market correction. Why? Because the Fed had raised rates. Powell learned, pulled back immediately from that, and didn't do that again. Now they're talking about pulling up interest rates, 3 to 4 hikes maybe to get to about 1% from the 0.08% we're at now. And they're also talking about not only stopping their purchases, but running off their balance sheet and selling, the Fed selling, the largest marginal buyer selling existing debt back into the market. That will put pressure on bonds. So yeah, I could see that happening. That's a really good question. I think the 𝙁 report in the precious metals is reflecting people thinking all this is going to happen and precious metals is going to shoot up. And that's why I have 2 analysts on the program this week that are predicting that precious metals are going to shoot up for those very same reasons. Good question. Any other questions? I've got a comment here by Great Nate. Love my unbroken lead PB sealed mint bags of Franklin Kennedy halves. How much will they be worth? Well, they're going to be worth a lot more than they are now. That's for damn sure. And especially if you've kept them in really good shape, they could have some collectible value if you kept them in really good shape. So yeah, if they're not scratched up, you could be doing pretty well, my friend. You could be doing pretty well. I'm scrolling back through the chat. I think I've answered all the questions. Dun, 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 dun. Casey Carter says, thank you, Rob. It's coming. I agree with you. John Bethea says, I will say that the power will be in silver. I agree with you. BCAT78 says 10K won't be worth much though. Yeah, if we have a hyperinflation, it won't, but your metals will be. That's why you get in the metals. Lion in the Sand Ministries. Why isn't big money like Warren Buffett, Ray Dalio, and Jeff are not buying metals? They're all warning about inflation, yet not buying. Oh, I think they have the metals. Don't be fooled. These people are not stupid. They don't advertise it. Why? Because they're trading the markets the way the powers that be want to. They're not going to move the metals market while they're accumulating their position. They're going to accumulate and they're going to sit on it and not tell anybody because they have billions of dollars in other positions. They don't want to panic the market. That's why. And plus their buddies are all the market makers. Those big investors know the market makers. They're not going to spoil the market makers game. They're making money off the market makers game. That's why they don't tell you. That's why the Warren Buffetts don't come out and tell you. That is why they are lying, BCAT78. I agree with you 100%. Lawrence Sawicki says, Reddit Wall Street Silver anniversary this Saturday, January 29th, 177,000 apes now on Wall Street Silver. They are growing like mad. And I saw something come out about how many millions of ounces of silver they had accumulated on the Redditors had. It's a massive amount. Remember, it was hundreds of millions of ounces. So obviously they have been pulling physical off the market because they know what we know. The price is going to go up, especially when the derivatives market is positioned the way it is now. The bullion banks are net long. The managed money's net long. The rich families are net long. The rich people are net long. And only the producers are short for hedging. Guys, I think it could be happening. We're going to have to see what happens. All right, we've been cranking for 45 minutes. Woo, I'm going to take a breather, guys. I think this is going to do it. We had a great poll. Almost half of you think that silver is going to go long. They're going to let it go long. I agree with you. We're going to follow that COT report. The next one will be out in a day or two. We'll follow that one. We're going to see if they stay net long. If they stay net long, silver's going to run, everybody. It's going to run. I don't think it hits the next plateau above 29 to 30 until gold starts to run with it. But I could see silver hitting 25, 26 easy. And then if gold catches a bid, if we truly get worse economic data, the Fed actually tightens like they say they're going to do, and the shit hits the fan in the general economy, you could see it run, baby, run in both gold and silver. I'm serious. You could see this run hard and fast. I've got 2 analysts on my channel this week predicting exactly that for gold and silver. Stay tuned. This has been Rob Keats, your host, GoldSilverPros.com. This is Cowboy Metals live stream broadcast from the great state of Texas. And we take no bullshit. Thank you, everybody, for joining. Thank you, all the regulars, for coming to the program, all the new people. We cranked out over 400 people on a live stream. This is a lot of fun, ladies and gentlemen. It's always a lot of fun when the metals do what we want them to do. Till next time, this is Rob Keats, Gold Silver Pros. Keep on stacking.